this video, I'm going to talk about how to understand the long-term capital gain tax rate. There are three tax brackets for long-term capital gain: 0%, 15%, and 20%. Let's see how to understand it. So this one is the long-term capital gain rate for single filer: 0%, 15%, and 20%. Those numbers are based on the filer's taxable income. Let's say the filer's taxable income is below 40,400. So any long-term capital gain will be taxed at 0%, which is you pay $0 on the long-term capital gain. So how about the taxable income is between those amount? Then the long-term capital gain will be taxed at 15%. If the taxable income is greater than those amounts, then the long-term capital gain will be taxed at 20%. Let's see an example. Say Chris single. In year 2021, he has a long-term capital gain of the 20,000 from selling Amazon stock. So Chris has a long-term capital gain $20,000. So should this $20,000 be taxed at a 0% rate, 15% rate, or 20% rate? Well, this depending on how much the other income he has. Let's say Chris has other taxable income is $20,000. So give the Chris total taxable income is $40,000, equal to the other taxable income at the long-term capital gain. So those amounts are less than the 40,400. You can see here. So in this situation, then Chris will pay zero tax on the $20,000 long-term capital gain. However, he still has to pay income tax for other $20,000. So let's say Chris has other taxable income is 30,400. So the total taxable income will be 50,400. So equal to other income plus the long-term capital gain. So those total taxable income will be greater than 40,400. So what the excess amount is, you use the total taxable income minus the excess amount. So excess amount, this is $10,000. So those $10,000 are considered the long-term capital gain. So those $10,000 will be taxed at 15% rate. So which give you the long-term capital gain tax is $1,500. How about Chris has other taxable income is 40,400. You can see it's exactly equal to this number. So then give you total taxable income. The excess amount is the $20,000 is exactly equal to the long-term capital gain amount. So this tell you any excess amount of this $0 upselling this dollar amount, so that will be taxed at a 15% rate. So which tell you that all the $20,000 long-term capital gain are subject to 15% tax. So which give you long-term capital gain tax is $3,000. How about Chris has other taxable income equal to 445,850. You can see this amount is exactly equal to this 20% rate here. So any excess, so if you add the long-term capital gain, so will give you the total taxable income is greater than the upselling of the 20% rate here. So that all the excess of the $20,000 capital gain will be taxed at the 20% rate, which give you long-term capital gain tax is $4,000.